2020 was such a unique year, but as much as we all wanted New Year's Eve to flick a switch and magically be different, it's not going to change so quickly. Some of what we know will just never be the same, and even stuff that will go back to normal will do so slowly, and we are far from out of the woods with all the tumultuous scenarios just yet. There are two ways to look at this: either focus on the doom and gloom, or you can look for the opportunities in the doom and gloom. Tumultuous times like these create opportunities to become rich, and 2021 could be a rare opportunity in our lifetimes. 2021, the year you can get rich on the stock market. Volatility and an environment where everything can rapidly change in an instant can be hard to live through, but they present lots of opportunities if you look for them. Unfortunately, we can't really do much about the situation we are in, so you can get sad about it and no one would blame you for that, or you can try to make the most out of it. Given all the unknowns of the upcoming year, we know that at times there will be announcements that will make the markets either go down or up rapidly. Obviously, you want to buy low and sell high. Now, I'm not proposing that you just buy when things go down and then sell when it starts going back up. Realistically, if you haven't spent years learning the market and how it operates, you won't be able to get that right, and it's a recipe for disaster. However, half of this has been proven over time to be a smart strategy. That is, wait until there are sharp downfalls, and this is the perfect time to buy. The difference is, just don't sell. Instead, what you would do is buy stocks that have solid foundations that aren't being impacted by the company's performance, but instead by the general sentiment of the market. However, buying individual stocks can be more risky than just buying ETFs, which cover a whole industry or the market as a whole. At some point, we will get out of all this volatility. We beat the Great Depression, the 1918 outbreaks, world wars, and so on. So we know at some point we will bounce back out of all of this. I'm an optimist, but I'm also a realist, so I don't think it's going to be quick, but at some point we will. We don't know when things will go back to normal or a new normal, but at some point this volatility will even out. So if you can set aside a percentage of your income and have it ready for the time when things do go down sharply, then buy at that point when everyone else is selling. You're not buying to sell tomorrow. You're buying to sell when things get back to a bit of normality, or even in plans for your retirement. You might be selling in 40 years' time, which if you can hold off selling for 40 years, you're probably going to be making a lot off these investments. This is about how people who are building wealth think. Instead of worrying about how they will have to sell everything because a crash or a downward spike is coming, they instead see a volatile time coming and ensure they are cashed up, ready to take advantage of the opportunities that it presents. It's not just stocks either. This is a great time to buy businesses or real estate. However, they obviously require a lot more capital and an ability to ride out the negative situation for a longer period of time. The real estate market here in Melbourne last year is a great example of this. In the middle of the year, no one could leave their home. They couldn't hold inspections or auctions in person. There was also a lot of financial pressure on people, so some people had to sell their properties even though it was clearly a horrible time to do so. There was a heap of available properties as a result, and since it was so hard to actually sell, it meant that there was competition among sellers, so they had to sell low. Then towards the end of the year, we could inspect again and auctions could happen in person again. All of a sudden, houses were selling in days. The amount of people who wanted to buy a house started to build up. Also, people saw a priority on having a bigger house to live in due to being stuck at home. So we went from a growing market to a dead market that wasn't really a reflection of the actual value of the market, but was instead impacted by external impacts. Then instantly, once that external impact was minimized, it wasn't even fully taken away, but that saw it go right back up. It has gone back up, but also it's not at its true potential, so if you bought during that time, you could really maximize that opportunity in the coming years. But again, to take advantage of real estate, you need a lot more capital than you do with the stock market. So what are you going to do in 2021? I'd love to hear your thoughts on this in the comments. Good luck.